Let's have a chat about Uber. It is a company I hold shares in, so there may be some bias in the things that I say. But by all accounts, these guys are currently winning. They have over 180 million users per month. They've survived the pandemic. They have a fortress of cash. Globally, they have a great business. But their stock price has been beaten down the last couple of months. Why does the market seem to be hating on a company that is basically printing money? The answer is Robotaxis. Many people think Uber is keeping the seat warm until a Tesla or a Waymo show up with their own robotaxis and makes their business redundant. And look, those claims are valid. If a robot can drive you cheaper than a human can, then that's a problem. But I think the doom and gloom is amplified a little too much. I want to talk about the strategy that Uber has been playing since 2020 and why the recent news from Nvidia at CES may have just helped them out a little bit more. I think first we have to understand why people are worried for Uber, and it really comes down to one problem, which is the human driver. Let's say for a £20 journey, Uber makes £8. The rates are variable, so it could fluctuate to be even more or less, but I think that's kind of the normal take rate. If you replace the driver with a robot, insurance costs change, you get economies of scale and so forth. So the cost of the ride drops significantly. If a robotaxi company now charges a £5 for a ride, then who's going to want to pay 20 for a human driver driving an Uber? The nightmare scenario is if a robotaxi company owns the car and also owns the software, then why would they want to partner with Uber when they can just keep 100% of the profits, which is actually what Tesla's proposition is. They want to have an environment where they have a closed off garden of their own vehicles and their own software, completely cutting Uber out of the chain. The thing is, Uber maybe saw an environment like this happening a couple of years ago. I remember back in 2020, Uber had a division to develop their own autonomous vehicles. It was called ATG, or Advanced Technologies Group. They were burning billions of dollars trying to compete with Alphabet's Waymo, and then they sold it. They realized building autonomous vehicles is not only incredibly difficult, but also extremely expensive. And it didn't help that a self-driving Uber that was supposed to be supervised caused the first death from an autonomous vehicle, which put a dent in their reputation. They switched from trying to be a Tesla to perfecting the things that they were good at, which was connecting drivers to riders. As I've said, making autonomous vehicles is expensive. Robotaxis are an expensive operation to run. Of course, unless you're Tesla, who are aiming to price their robotaxis around $30,000. I've seen estimated costs of a kitted out Waymo vehicle totaling over six figures, given that the technology they use is far more expensive. But those prices seem to be coming down for newer generations of their vehicles. Nonetheless, for a robotaxi to make money, it needs to be in use constantly. So if you are a new robotaxi company or a company getting into the robotaxi space, yeah, you have these cool looking cars, but where are your customers? You pretty much have two choices if you lack demand. Spend millions or even billions on advertisement, or you could plug your cars into Uber or Lyft, for example. But then what if a company gets too powerful and it creates a monopoly? What if Tesla dominates the market? Tesla or any other company would most likely undercut Uber to a degree that Uber could struggle to fight with. The question is though, how likely is this to happen? Well, for one, Tesla's robotaxis were supposed to be roaming American streets at scale many years ago, so that goes to show how difficult of a challenge building out robotaxis is. Autonomous vehicles also aren't perfect. They need to be stress tested in different environments, different climates, and different edge case scenarios. There was that recent outage in San Francisco where a bunch of Waymos stopped, which caused heavy congestion. So time will be taken to make sure that these vehicles are as safe as possible. Regulation is also a big thing. Europe is of course more strict given their strong stance against monopolistic practices. So the idea of a monopoly forming here is slimmer. Nvidia also recently announced their alpamayo technology. The idea is to allow legacy car companies to integrate self-driving into their cars. Although it's nowhere near as advanced as Tesla's software, Nvidia has opened the gates wider for more companies to start building out their own autonomous vehicles. It will take time for everyone to catch up to the likes of your Teslas and your Waymos, but this is ultimately a dream scenario for Uber. The robotaxi is becoming a commodity. If Mercedes, Ford, etc. all have their own robotaxis, then the competition for customers is only going to heat up. And when you have all these companies fighting for customers, who wins? It tends to be the aggregator. Think about Booking.com. They don't own a single hotel room, yet hotels like Marriott and Hilton want to be listed on their website because that's where the customers are. Uber has already signed deals with many AV companies to take advantage of this. It's like they're building a coalition against Tesla's closed system, whilst also protecting themselves from the threat of being dropped by Waymo. But let's take a step back for a second. We aren't going to flip a switch and then all of a sudden every human driver is replaced tomorrow. Most likely, over the next couple of years, we'll sustain a hybrid of both human and robots. Because again, robots are not yet great with real-world edge cases or certain trips. Uber has the option to send human drivers as a fallback in situations where robotaxis aren't good. So I think the bottom line for me is this. Uber isn't fading into irrelevancy anytime soon. They've spent the last few years building a fortress around their customer base. They sold off their losing hardware bets and locked in deals with some of the biggest AV players in the game. The reality is the autonomous market is complicated and it's getting more competitive every day, which is exactly what Uber wants. As these AV giants pour billions into a hardware war to build the superior machine, Uber, as the aggregator, will happily just sit back, own the customer, and take their cut. Personally, as someone who's excited about future technologies and autonomy in general, not just in vehicles, I enjoy seeing big companies compete and innovate to build the best product. I just hope things are not rushed and commercialized to a point that causes unnecessary fatalities.